welcome to our webinar, which is all about redefining success. The webinar is scheduled to run for about 40 minutes. We don't plan to have a Q&A session at the end of this webinar. So if you have any questions that you want to speak to Stephen about or put forward to Stephen, or indeed any kind of follow-up from this webinar, please don't hesitate to email Stephen directly. So it gives me great pleasure to welcome Stephen. Hello.
Hi, morning, Joe.
Yeah, so Stephen's one of our directors here at Davies Grant. Is going to be running the webinar today. So over to you, please.
Thanks, Joe, and hi, good morning, everyone. As I present this today, we are getting close. I think we're in Plan B at the moment of COVID here in the UK, and not quite the Christmas we all potentially had planned, but hopefully it should all be good, at least to see family and friends during this time. But yes, it's really this quite, in light of what's going on, this is even more timely that this webinar of redefining one's success is run. And the reason why we wanted to run it, and I particularly wanted to run it, is that sometimes, you know, in fact before COVID, we would define our success, whether it was on the top line of the business, i.e. what your turnover or your sales were, or indeed it might have been just the bottom line, the profit, and that could be absolutely fine. But I think COVID, especially in lockdown, has given us time to potentially reevaluate how do we define success. What does success look to us? What does it is success happiness, for example? Is that a barometer of success? How happy I am, or how much time I have, or other metrics, perhaps beyond just the numbers of profit and turnover. And yes, of course, those numbers are absolutely important. I would say that as a partner in an accounting firm, of course. But nevertheless, as we have had so many conversations with our clients over this COVID and lockdown period, about really reevaluating and redefining what success actually means. And so I thought it's a great time to present this all to yourselves this morning. So here's a quote from Winston Churchill, just to kick things off, which says, "Success is walking from failure to failure with no loss of enthusiasm." And so what we're saying here is, and I can take our firm, Davies Grant, as an example, is that many things over the last 18 months over COVID, we have not succeeded at the first time at and have failed. But we have persevered with enthusiasm, whether it was getting all the team remote working or flexible working and all those sorts of things. But the key thing is that if you keep on doing it, and keep on failing, but you do it with enthusiasm, eventually you'll get success. And so I'm sure there's many things that we need to learn and have learned over this time, and hopefully this will be another one of those things. So what's the agenda for today? Just to outline for you. So number one, we're going to look at how do you define success, and success for you, your business, and your team. And it's important that we've done that in that order, because the business should be there to make success for you. You're not working for the business is working for you. Therefore, success for you should be absolute number one. But of course, thereafter, your business and your team are vitally important in getting a coherent, successful period for everyone. We then move on to your smart business plan. So this is a plan that every business should have. You should always have a business plan, and of course, business plans that pre-COVID, in 2019, that one may have of where they hoped they would be now. We're coming to the end of 2021. If you work in calendar years and you had a sense of where you wanted to be, I would imagine for most people that has been ripped up. It could have been in some industries. I don't know if you were a small mask distributor in 2019. Perhaps your your business plan has been significantly changed in a positive way, but in other industries, of course, it's been significantly impacted. So does the business plan need to be reviewed, and does it need to be smart? And we'll come on to what smart means later on. Then we're going to talk about strategies to grow your profit and cash flow, and ways that can actually help your success in other areas of your business, in terms of your lifestyle, for example. We'll then touch on what building a healthy business, and building a healthy business is different to building a smart business, and we'll explain what the difference is of that. Ensuring sustainable success, so looking at things in the short term, areas of quick wins, if you like, of what you could do to help the business in the short term, and then some options of further support. And we'll touch on various things throughout the seminar, for things that you may need some support on, things you might be able to do yourself, or things you might need help in to really push the business further. So what is this this new definition of success? And as I said, as we said, pre-COVID, success may have had totally different definitions for you. But what we're going to do is, and throughout this webinar, we're just going to have an example business. This business is a gym. The gym's called The Rock, which is owned by a fictitious husband and wife called Dwayne and Jane. But the principles will be equally relevant for your business. And what we're going to do is, in this scenario, Dwayne and Jane, pre-COVID, they originally had a plan. They wanted to build the business up to £50,000 profit a year. But at that time, to do that, they were working crazy long hours. They were doing things they didn't enjoy doing, working on weekends, just really not having a quality of life at all. But really, their aim is that they're looking at it, that is there a way that to relieve stress and put other things in place that they potentially could maybe have a profit of £40,000 instead of £50,000, and yet achieve what they define as success better for them. And that's what we're going to go and sort of we'll come back to Dwayne and Jane and their Rock gym in throughout this session. As we said, we need to also look at what it means, success means for the team, and we're going to flesh out really how to create this new definition of success. Okay. So, as we said, we have to start with yourselves. Yourselves being, I'm assuming that those people on here are business owners, and so I'm talking to you and the challenges you've had. But what do you actually define as success in business? Does success, for example, mean the hours that you work? So if you're working on your business 70 hours a week, would success be defined if you were working 50 hours a week or 30 hours a week, or manage to have somehow manage to run your business and only have to work 20 hours a week? Is the hours that you work for yourselves a barometer of success? What about your role? Are you, when you go into work each day, are you looking forward to it? Is the actual work that you're doing, is it enjoyable, or is it a necessary evil, and you dread it each day, and you wish you didn't have to deal with it? So, for example, it could be that Jane, in our Jane and Dwayne gym, that Jane, because of the numbers that they've got, Jane ends up having to do all of the marketing of the business. She has to do the finance. She's dealing with the VAT returns. It keeps her up at night, and she has to deal with it and helps with the running and some of the operations of the gym, and all of this stuff is not really what she loves to do. So she's happy to put in the hours, perhaps, but not necessarily doing that role, and it's stuff that really stresses her out. Then, of course, we have the classic or the old type of definition of success of a business, the one's salary and drawings. but one has to think, what do you want that will actually make you happy? What success? If someone's earning, for example, profits of £200,000, and then to get to £250,000, it's going to be hugely stressful. Or going from £50,000 to £70,000, that jump is going to be hugely tough. And actually, £50,000 is perfectly fine, and maybe you just cut the costs accordingly. That may be better. That may be a better definition of success for you. And so with that in mind, when it comes to holidays, and this is also important, how many holidays are you able to take a year? So it's not just the hours that you work, as we said, how many hours in a week that you work. What about the holidays? Is that something that's important to you, to get that break, to be able to either actually switch off, or at least not be in the office location? You're able to go and be in a remote, as the picture shows there, a lovely, walks in the forest and camper vans. So, where, when, and for how long for? So the first thing that one needs to do, and this is really important, and I have to say, I did this myself. I did this with my wife, and we've done various versions before, but there's a great personal budget template that we have, that if you email me after the event, I'm happy, we can share that with you complimentary, which is really, really excellent. It seems to have all of every expense that I could think of was listed on there. Perhaps one, I don't know whether it was a dig on me, but one of the ones listed on there was hair grooming. So I couldn't really enter a lot of data or figures in for that, but that was a saving of my costs for sure. But other than that, the personal budget helps us really to understand whether or not we can get by with less cash from the business, and indeed, what we need to save. Are we spending too much? And once you look at it, it can then really help you to reduce potentially the cash flow strain on the business. So, especially during COVID, hopefully you haven't increased your spending online too much, especially if your business is under some sort of pressure. But for sure, I would recommend going back 3 to 4 months and reviewing your expenses and ensuring your budget is realistic. So coming back to our example with Dwayne and Jane, and they've determined they really think they can make things work on 40,000, not 50,000. And so horribly stereotypically, and I apologies for this, but perhaps in order to do this, they've looked at their personal budget. Dwayne says he's going to cut out on his supplements that he orders, and Jane's going to perhaps meet friends or go for instead of going for lunches, we'll go for walks with friends, and so that could save a huge amount. And then they've looked at their holidays, and perhaps rather than going on a luxurious holiday abroad, they decide that actually that they would be quite happy to go on a camping holiday instead, and that could all reduce their costs. And they feel that way, moving from say 50,000 to 40,000, given everything that's gone on with COVID, that'd be realistic. They could still live on that and still have a nice, a quality of life that they're looking for, albeit this hasn't addressed any of the other aspects so far, but we'll come on to that in respect of actual hours at work and that sort of definition of success. So we've spoken now, first of all, about what does success mean for you personally. And next then, we said, is to look at what does success mean for your business. And, if we go back to our example, in the past, Jane and Dwayne, they wanted 50,000 each, and they've done their budget, we said, and they think they can go and get, and work it all out and get, if they get 40,000, that'd be fine. But how are they going to get to the 40,000? And what does that mean? And, what sort of key figures do they need to look at to keep an eye on that? It's not just turnover and profit and loss. Perhaps there's certain other metrics that one needs to really drill down into to start to understand what one needs to make the business give the income that you're looking for. And one of the things that we first look at is something called your minimum viable sales. And this is really what essentially, what is the minimum amount will provide you with the profit that you want. And effectively, instead of going from a top-down approach, so you start with the sales at the top and work your way down to get the profit, we start from the profit and work our way back up, and that will tell us what we need. So if we say here, so this was the original plan, and we're just going to go through the original plan. The original plan that they had, like pre-COVID, was they're going to make £50,000 a year. They had worked out, and we had done worked with them to analyse their costs, looked at their management accounts, their annual accounts, to work out what their overheads would be. So we've got 50,000 profit, £62,500. So I'm sure we can work out that would lead to what you need to have a gross profit of 112,500 in order to then end up with, by the time you deduct the overheads, end up with profit of 50,000. Now they've looked at their gross profit margin, and we worked with them on that for them to understand, well, for every new customer, how much does it actually cost with various things, the equipment, or the trainers and and personal trainers and the coaches and the classes, and it works out they make 50% margin on each new gym membership and someone that comes to the gym. So 50% GP, which comes to, therefore they would need to make £225,000 of sales in order to profit. And what does £225,000 work out? If we look at it again, try to get it as in numbers that make more realistic sense to us. So for them, for their gym, they need to make £5,000 a week. And I've done it over 46 weeks because, yes, I guess a gym can continue, but it's holidays and so on and so forth, and days off and bank holidays and what have you. So, it was £5,000 per week. Okay, great. So that was the original plan. Now we come to the new plan, and they're saying really £40,000. That's really what what we think in light of COVID, what's going on, how many people are coming. Plus, it will help us a bit with our lifestyle and our stress. So the overheads are still in this plan are exactly the same, 62,500, which means the gross profit it drops down to 102. The GP margin is still the same, and so effectively they need to have sales of 205,000, and instead of having to make £5,000 a week, they now only have to do £4,500 a week. But there's then a third plan, and this one really, where they look at it, is to perhaps address particularly Jane's time and her stress working all the things that she doesn't want to do. And so we in this scenario, we would work with Jane and have a look at, well, what areas is she spending too much time? So we mentioned, for example, the marketing side, the marketing or the finance side, and stuff that she really doesn't want to do. She much enjoys doing other aspects. She enjoys running the classes instead of doing all of this admin work. And so we factor in, still want to make £40,000, but instead, because we've now taken on some external support to help alleviate from Jane the pressures and the strains, the overheads have now gone to £72,500, which means in order to make 40, the gross profit is 112,500. But what we've also done is we've worked closely with Dwayne and Jane and realised there's a few ways we can tweak the business in order that the gross profit margin can actually go to 52% instead of its current 50%. And a little bit later, we'll talk about the growth equation model and perhaps explain how we can look at certain gross profit percentages. So therefore, with that tweak of 52%, it means that they now need to do £216,500 of sales, effectively £4,000 £4,700, and they'll get £40,000. The same there, but in addition, Jane now doesn't have to do all of the stress and all of the admin. So in terms of, we're looking at redefining success, suddenly her quality of life and what she defines as success is significant. Great, so that's the minimum viable sales. It's now time to actually put some goals together to achieve those numbers, because that's all great and that all, that all looks easy. It's really important that, looking at our example, Dwayne and Jane, they need to set some smart goals about how to achieve that number, that 4,700 per week, which was the third plan, if you like. And an example might be to attract 10 new customers per month. So that they have a natural number that come through the door applying for membership, and maybe it might be a certain way that they decide, perhaps through a marketing spend, whether it's Google AdWords or adverts locally, certain promotions, that they really, one of their aims is to get 10 new customers per month. And we'll talk, it's important to remember that 10 new customers a month, because that will come on a bit later. But we can then create specific actions to achieve their goals, remembering that each goal and action needs to fit into this SMART format. And this form the basis of your wider plan. Okay, so what does SMART mean? Well, you may have heard it before. SMART stands for specific, measurable, achievable, relevant, and timely. And it's something that that really, if what you want to achieve doesn't fall under the SMART objectives, then it's likely to fail. And so, these SMART objectives are really, really important and fundamental when devising a business plan, devising, as we said, how you want to really achieve the profit and the success that you want. So, bearing in mind the SMART objectives, we then need to feed this into, we've got the SMART objectives, we're working on the minimum viable sales and other things, but we now need to look at really how do we sort of put this together and put it into not a 20, 30, 40 page business plan that you'll spend weeks poring over, and then once it's prepared, chuck it somewhere or save it in a digital file somewhere and never look at it again, but maybe have a few moments of feeling good. This is actually something that lives with you, that's live, that you're accountable to, and something, very, very important, something that we work with our clients with, and indeed hold them to account to it. So at the Rock Gym, Dwayne and Jane, they've defined their core purpose. Okay, and they say their core purpose is to help you become a true badass. And of course, I can't really do the Rock's accent, unfortunately, but nevertheless, that's what they want to do, and they have their purpose and their vision, and that's what they start off, that they want to, that's what they want to achieve. And that's it. And then, so and what do they want to achieve? So that's their purpose, their big picture stuff. Then we drop down and say, right, okay, well, what do you actually want to achieve from that? And their definition of personal success is defined in that they want the £40,000 profit. They want Jane reducing her hours, as we said, delegating marketing and finance. Dwayne also, reducing his hours perhaps, and they can take, and they still have that family holiday. And so we then bring in, if you recall from the minimum viable sales, what is that? What's the, what's going on? What's going on here? And and this is this plan 3. That's our target. And one would start to plot then against each quarter how you're performing against those KPI, against those figures. And we then move on. Okay, that's the if you like, these are the figures, but what are the KPIs, the key performance indicators? So we mentioned, if you remember, that they need to achieve, in order to get the 40,000, they need to have £4,700 per week. They need to achieve a GP margin of 52%. Remember, we said they looked for 10 new members a month, and at the moment they're noticing that out of each inquiry that they've got 80% of inquiries become members. So their retention rate is 80%. That may be good, that may be not good depending on the industry, but that's a key performance indicator they're looking at and how they want to achieve. And their member retention rate is also 75%. So these are other things beyond like just getting more customers that they can look at. Their member retention rate 75%. Do they want to? They said they want to get greater than 75%, and that will save them having to spend perhaps more even on marketing, because they're able to retain the members and haven't got to keep on replacing them. And then the other thing is the average transaction spend. So you can have the same number of members, but perhaps each of them might spend a little bit more in the gym. Maybe they have a monthly membership, but certain specific classes and you have to pay for outside of that membership, or in the canteen, for example, certain health drinks or health food that people might spend that can then build up that average value of one of the customers in the gym over a 12-month period. And you can see here it starts building up with the opportunities, the vulnerabilities, and the most critical challenges. Well, that's, again, as you'll see throughout this, and you'll see the pattern, again, that's all great and that's lovely, but even a year is a long time. What a year, especially under COVID and whatever else, a year seems a lifetime away. So why don't we look at something that perhaps is more tangible, more real? And so what we do is we suggest that you turn your year business plan into a 90-day action plan. Because the first 90 days is all about really those actions that in our scenario, Dwayne and Jane will take to ensure they have a robust system to measure that they are on track and to achieve their business definition of success. And it's super important that the plan becomes a reality, and as I said, doesn't just sit in the bottom drawer. And so going from that business plan, how do we turn that into a 90-day action plan? So they've had a look and said, well, to be honest, we're not going to be able to keep track of any of these key performance indicators that we had if we don't have a decent management reporting system. Perhaps they're keeping things on Excel, or it's all in paper somewhere, or the system they use is they don't really keep it up to date and sort of do everything. If it's VAT, wants a quarter at the end just to get everything done, but they're not really looking at the figures, not really understanding them. And so perhaps in their 90 days, they're looking to get a new management reporting system, perhaps, or they're looking to get some Xero training for themselves if they're on Xero, a product that we know very, very well, that they may want to do that, so they know how to look after the Xero better and get more meaningful figures. And they may have a management reporting system, something like called Gym Master, that can help them understand and track all of their subscriptions better. And then they can start looking at getting that real timely management figures, get a real sense of what's going on, so that they can then go live. Here we've done it, in October. This is starting in October, so they can go live in November. And here you can see here coming down the other targets. So the number of members they want to have. We talked about success being defined potentially in time off, not just hours, but they want to have 2 days off a week, which if it's your own business, the two of them, husband and wife working on a business, to have the 2 days off, especially in the gym, Saturday and Sunday, be popular, 7 days a week. How does that get factored into it? Where do we get time creation? And of course, Dwayne and Jane, what they want to earn, what they want their net income to be out So they've got actual cash they can draw and live on each week. And perhaps one of those targets can be that they can reduce their debtors from 32 to 22. Because although they've got, for example, their members have gym membership, but nevertheless, some people, the direct debits cancel, they bounce. Some people are in arrears and they promise they'll pay. And suddenly, before you know it, there's actually the debtor days are on 32 days. And if they can get them down to 22, for example, that can make a huge difference to the cash that is actually in the business. So carrying on the theme of, well, this is all great, but how do I do any of this? Well, there's here the traffic lights, which is, one says, before you start doing anything, you have to work out what you need to stop doing. And you may be spending, as we said, spending time. Everyone can be busy, and we can all be busy every day and say we're busy doing this, busy doing that. But are we busy doing the right things? And what things should we be dealing with? Is it the urgent and important aspects, or perhaps we're busy dealing with the unimportant, not urgent aspects, but we just decide to gravitate to those to deal with. So we're doing the wrong things, and we're busy with the wrong things. So what should we stop doing? At the same time, what should we continue to do? There may be certain aspects of what you're doing that you absolutely love doing and give enjoyment and are great for the business and the growth of the business. And then by freeing up your time from what you stop doing, it then allows you to do what you need to start doing. And so with that in mind, this is something perhaps that they would look to do and look to start doing, and it's something that it looks a little bit scary, but it's quite it's a really nice graphical way of working to understand your business a bit more, and it's something that perhaps Dwayne and Jane they work with their accountant on to work with, and this is what's called the growth equation. Okay, so what we've done here is this is the, if you like, the old plan when they wanted to make their £50,000, and really there are 5 key inputs into this growth equation, and the aim is really ultimately is to see what at the top here by putting certain inputs over here. Hopefully you can see my mouse on the left hand side and down towards the bottom and the bottom right, that at the top the net profit, the valuation, and the profit improvement are the outputs that will come from this. But there are 5 inputs into this initially. So the first one is the retention rate. So what they thought originally that in the old plan that their retention rate would go from 80% to 85%, so 85% of their customers will stay with them. They thought they would get these, we talked about 10 leads per month, so 120, the 10 leads per month. And not only that, their conversion rate would also increase from 80% to 85%. So all of that factored in together, the total customers would increase from 536 customers to 612 in a year. They kept it simple and assumed that the transactions per year was still just 1, but maybe they've increased the transaction value, maybe the membership fee or something else by £25. And so they factored that all in. I had a look down at the bottom. Their old expenses were 62,500. They've also now, at that time, they had worked on it. They wanted to give themselves more time, so they decided to spend their expenses 62,500 to 72,500, and invested in marketing and finance support to free up Jane's time, and this ultimately led to £50,000 of new profit. But we've realised that we're now living in the COVID world, and so that plan didn't work or isn't applicable now, and so they have to be a little bit more realistic. And remember, we've got this plan that they've realised £40,000 is what they'll be able to to achieve. And again, one has a look at their retention rate. They've realised in this time, people are cancelling gym memberships, not looking at it as quite a luxury item. So perhaps retention rates have gone down from 80% to 75%. They're still really hopeful on getting the number of leads and inquiries. So still the 10 a month. So you can see there are 120 leads, and they're also hopeful that the conversion rate on those leads, they'll be able to turn those into customers. And so overall, the total customers goes to 546 from 536. Again, we're being quite modest here. We're saying the transactions per year is still only one, but the transaction value, again, we're increasing that to 395. So just a few tweaks on their margin as to how they're going to get, how they're going to achieve their sales, and perhaps they can increase their prices slightly on that. And so when you have a look at that, the expenses stay the same. There's still the 72,500, and so that's again this additional £10,000 to free up Jane's time of outsourcing expenses. And then, if you remember, we were able to work with them to increase their GP margin as well. Some of it was down to this increase in sales. Other was looking at some of the costs they were spending, and so their GP margin is 52%. The cost of goods sold reduces to 48%. So the annual sales go up, and so you can see there at the top they're able to achieve the £40,000. And I have to say, this once you look at this and you work on it, it's something that's exceptionally powerful, because this is all on all sort of modelled, and so every time you put one of the figures in and you just change it and you say, what if I changed a certain percentage from this to this, certain numbers from this, all of the figures recalculate, and so you can really get that sense and really feel the impact and the wow of, wow, if I just do this, if I just do that, what could be the impact on my profit? I think it's very, very powerful, and I would say this in the accountant, I think it's a really quite cool workbook that is used for business, and the clients find it incredibly powerful. So I guess this is all great, but what can we do in the short term? Because all of this stuff, it just looks like costs and getting new leads and getting new inquiries. This is great, but how does that help me in the first 3 months, for example? And I mean, one of the obvious ones is something that we touched on before. So they're looking at it, and at the moment their debtor days are 32 days a month. But if they're able to change their debtor days to 22 days per month, this would actually instantly get them an extra £5,385 into their bank account for doing no new sales, having no new leads, and really just focusing on getting those debtors paid. And so if they can really spend a little bit of time focusing on those customers, getting those down, there's £5,500 there just sitting there that can help fund any of these initial costs, perhaps in the marketing that they wanted to spend in the short term, that would then increase the number of leads that they have. So we've done the success for you. We've spoken on that, and we've spoken about what does success for the business mean, and hopefully you've seen through certain tools, through the minimum viable sales for the business, working it through to the one-page business plan, the 90-day action goal, and then perhaps short-term aims as to how to get cash in the short term, and the growth equation, the cool spreadsheet that I really like. All of those tools for help for success for your business, and for you to identify, and tools for you to work out how to get that success. But if the final part of this, and we said, was success for you, success for business, is of course success for your team. And 99% of businesses, your people are your greatest asset. They certainly are here by a country mile. At Davis Grant, as an accounting firm, we would be nothing without the team here. And with risk of burnout higher than ever, especially under COVID and the unique pressures, what's going on in the job market and causing severe shortage of workers around, never has it been more important to support your team and to have their success in their roles and beyond. Oops, sorry, I clicked on that by accident. And these are some of the things that that employees are looking for now, and how they define success. Some of them define success in terms of the salary and what salary they get. That's their pure metric. Some define success as what the hours are, or what the flexibility is, or indeed what their role, their responsibility, and progression opportunities, or indeed their perhaps what the holidays are, or any other perks that may be available to them. There are many different things, and I think I was listening to a podcast this morning when I was driving into the office, and it's what stood out when talking about team is that not everyone is the same, and to think of all the team and everyone, we're all human, we all have different interests, we all have different motivations and different definitions of success. And so it's important that one understands what motivates each team member, and hopefully one is able to address that. And there's this is a little sort of wagon wheel, but that just shows how growth is made and how really vital the team are. So we start, and we've got here people, strategy, execution, and cash. So we've spoken about the we said the people, and how again the right people will have the happiness and the culture of the firm, and those, it's important then, once you've got those people in place, that Dwayne and Jane in our example put forward to the team what their vision and their focus is, because the team need to be on the side and understand what the ambitions are of the business, and be in tune and be aligned with those. Once they are fully aligned with them, then they'll naturally go to the profit and efficiency and execute that, and then in turn that will lead to cash, which provides more oxygen for the business. So it's it's really important. But we've seen it where perhaps you hire people in and you think that magically they're going to know exactly what needs to be done in order to achieve profits and efficiency. And a common mistake that businesses have is they miss sector 2, going round in that sort of 3 to 6 o'clock sector of the strategy, of the vision and focus. How do you put your vision and your focus together? We went through an exercise with David Scron at the beginning of the year in January of actually writing down all of our core values and putting those all together. And we had a whole exercise, first of all with as partners, then with the senior leadership team, and then also with the whole team, to really say what's the vision, the focus, what do we agree, what are our core values, what's our mission. And that's something that really is important to us. And for example, David Grant, every new team member, those core values are embedded into them. Again, on this podcast I was listening to this morning, they mentioned about a chief executive that had done such an exercise in core values, and they had it now up on their, well, some have it on their wall. They didn't actually have it on their wall, but they had done this 7 years ago, and they were asked, well, how many people in the business now can tell you what your core values, what you stand for? And chief executive, she rather sheepishly said, probably no one. In fact, I don't even know what they were. They were written so long ago. So it's not just an exercise for doing as a one-off. It's something that needs to be maintained, enhanced, and be embedded as part of the business. And so this, in there are 4 disciplines really as a healthy business. So we spoke about a smart business, and that was all, if you like, the numbers and the quantifiable aspects. But if you like, here, and I guess you can quantify it, but I like to think that these are more the qualitative aspects. This is to have that healthy business. And you see here there are some key things: building a cohesive leadership team, to create clarity, over communicate clarity, and then to reinforce clarity. And clarity is absolutely critical. The team need to understand why your business exists, how your business behaves, what your business does, how your business will succeed, what's important right now, and who must do it. And I think it's important that one of the takeaway points from this is that you have to ask yourself, do all of your team and all of your employees who are working for you, would they be able to answer points 1 to 6? And for sure, again, we have worked with clients to, I said to you, we went through an exercise of core values. So it's something that we do for our clients ourselves, because we think it's so great and fantastic. And so it's something, the core values is just one part of understanding why the business is there, why it behaves that it does, what it does, and what's important. And as I said, one has to look at, we're in a modern, I say modern world now, a bit cliched, but we're certainly in a not post-COVID, in the very midst of a COVID world. And so one has to look at all these sorts of things now of how to retain team. And for example, being a flexible employer is just one of those. So at Davis Grant, we before pre-COVID, we had different start and finishing times for the team, but during COVID, of course, whether it was mandated and subsequently in the last number of months, we've had flexible working arrangements, remote working arrangements as well. We've always, well, I say always, for about 10 years, we always used to finish early on a Friday, so it used to give teams, especially in the summer, some time off, make them feel like they've really almost got a 2.5 day weekend, and and of course, well, as an accounting firm, as a training firm, we studying and exams, not just for trainees to become qualified accountants, but training across the board in exams and qualifications. So these are sort of areas that I'm not just saying them and not meaning them. It's something that at Davis Grant we do preach, and I think it's important for yourselves in whatever industry that you're in, that these are things that you need to consider in order to have that great team for you. And perhaps this is illustrated. I don't know the age of some of you who are on the webinar today, but certainly, I've been doing this for 20 odd years, and the diagram on the left is the old way that we were taught to how to measure success. It was sort of 50% based on your salary and 50% on your job title. It was the prestige, it was the status, and really as a boss you thought, well, I'm giving someone that salary, that's their title, what more do they want? But actually one can see now we've become more in tune with certain aspects, certainly in the last number of years. And one can see here on the right that there are actually a number of factors that feed into perhaps how the team members define their success. And it's important that we understand what gets them going, and what are their barometers of success. So we've spoken about a lot today. I looked at the time. We've apologies, slightly run over, but I thought it was important, especially in the examples, to go through in detail. There are a few things that I mentioned in the talk that I'm happy if anyone wants to drop me an email. It's Stephen stephen@davisgrant.co.uk, Stephen with a V. That I'd be happy to send to you afterwards if you wanted a copy of this that you can do yourself. The personal budget template. There's also a sustainable business success worksheet that's great. And then talking about the team, there's a team member sort of reflection questionnaire. There's a great way for you to email your team to understand really what they're feeling like. So that's something just for you being on this webinar today is something that I'm happy to give to you should you so wish it. And then really the penultimate thing for myself is, you see, we've touched on a number of things. There's a huge amount there that I've covered quite quickly, and with clients, this is something that we'll go through. We'll have many sort of sessions with them to work through with them, to coach them to really get the success that they want from their business. And you can see there, whether it's from business planning sessions or looking at cash flow forecasts, looking at just how to improve their cash flow. Management reporting without, of course, meaningful real-time figures, you won't even know how you're doing. And then, of course, all of this sort of backed it up in an initial sort of complimentary meeting to see perhaps how we might be able to assist you. So please do feel free to be in contact with either myself, or if you are a client already of Davis Grant, then feel free to contact your partner, and we'll be happy to take this further. So it only leaves me to say thank you very much. And that's slightly, I thought the session would be quite long, so that's why I'm not doing the questions now. But so if you've got any questions, either drop them in the chat box, and I'll get back to you after this seminar, or this webinar. Alternatively, feel free to drop me an email, again, at stephen@davisgrant.co.uk. And just to finish off, nothing is so contagious as enthusiasm. So we spoke about enthusiasm, and the success is doing failure after failure, as long as you've got enthusiasm and someone's teams, I was supposed to turn that off. But enthusiasm is the important thing, and the fact that you've come today and shown your enthusiasm, you're already well on the way there. So, yep. Thank you once again, and enjoy the rest of December, and stay happy, healthy, and enjoy if you're having a festive break. Thank you.